welcome to the podcast series Talking Success, connecting the global FinTech community. I'm Stacey Jafta, and today I'll be chatting with Lexi Novitske, General Partner at Norrsken22. Norrsken22 is a technology growth fund backed by over 30 prominent unicorn founders partnering with exceptional entrepreneurs building Africa's next tech giants. Hello, Lexi. How are you?
Hey, Stacey. Great to be here. Thank you for having me.
I'm glad we finally made this happen. It's been a couple weeks.
Yes, lots of busy travel schedule now that COVID has ended.
Where have you been traveling to?
Mostly around the continent. So we've been spending some time in South Africa with the rest of the team lately.
Nice. What's happening in South Africa? Can you say?
Well, we've actually done our first two deals, and both of those companies, although they aren't South Africa based, are expanding into South Africa now.
Awesome. Okay, before we go any deeper, I'd love to learn a little bit more about your career journey and then essentially what led you to become general partner at Norrsken22.
Yeah, so I moved out to Nigeria over 10 years ago now, and originally moved here to work in private equity. But what I saw was that private equity was realizing a lot of challenges. Companies were having a hard time scaling across their borders. Currency tended to be a major issue. Wasn't quite clear yet the consumer spending ability, but at the same time saw a lot of these incredible founders that had experience, working at global tech companies or running their own businesses, coming back onto the continent to start their own startups in tech, and started to get really interested in what's happening in technology. And back in 2015, launched one of the first venture capital firms on the continent, then called Singularity Investments. We invested in some incredible companies, which I can talk a little bit to later if we have time, but went on to put together a second fund underneath a name change or branding change, and it was called Acuity Venture Partners, which then led us to the realization that where the gap was today was no longer an early stage investing on the continent. A lot of micro VC shops have since been set up. There's been a real active global community in early stage investing, but there's still a huge gap in the growth stage capital. So we teamed up with some incredible sponsors, as well as a couple of team members, one partner based in Nairobi, Kenya, and the other based in South Africa, to launch Norrsken22. And Norrsken22 is very much growth stage focused. So we invest Series A through C, and really look to invest with the companies that we partner with across their life cycle to really make sure they can scale across the continent.
What got you interested in the investment world?
Yeah, so I've always been an investor, but before I was investing in publicly traded stocks in the U.S. at a hedge fund. So I was investing in traditional banks and insurance companies. And from there, really developed an interest in Africa, more so because I'd spent a lot of time on sabbatical traveling around and just saw firsthand that it was a massive untapped opportunity that really the international market was not paying attention to. So that really got me interested in Africa, and I proactively made the shift to move onto the continent and join the first fund that I started with here in Nigeria.
I'm going to ask you a question, and feel free to answer it or not. But there is quite a lot of talk on the continent of a lot of Western founders in Africa getting a lot of funding, and then African founded business not so much. Do you have any thoughts on this or opinions?
Yeah, so it's certainly not the case in Nigeria. I mean, all of the companies certainly generating not only great performance returns, but also a lot of growth and investment capital raised, are very much African founders with teams on the ground, and really they're almost their entire operational team on the ground as well. I think in some cases you do see it in East Africa and also some degree in South Africa as well. And I believe part of it is both a mix of the resources that are available to local founders, but also potentially, some sort of a there might be some sort of a bias from investors not really understanding local solutions that are built for local customers. And I think really the way to change that is to have local investors that are on the ground investing in these companies.
100%. You guys have invested in massively successful fintechs like Paystack and Flutterwave. At what stage of their business did you guys invest in?
Yeah, so we were really one of the first investors in both of those companies. So right after friends and family rounds, we were investing in the pre-seed or seed stages of those companies. And although it looks like now incredible risk-free opportunities in hindsight, back then I would say that there really wasn't near as much ready investment capital available to these startups back in those times. But also, I think a lot smaller universe of really high quality tech companies. Now we have a lot of opportunities, but it also takes a lot of time to kind of sift through and understand which ones will be the winners in the competitive landscape.
What stood out about those businesses at the time, since they were pre-seed round? Right now you focus more on Series A onwards.
Yeah, I think especially because we were investing at the seed stage, a lot of our investment confidence was behind both of the founding teams. So incredible founders that had worked building tech solutions for traditional financial services firms in Nigeria saw a huge problem that wasn't being met. For Flutterwave's side, it was more on the back-end infrastructure. For Paystack, it was really building out this merchant-facing payment gateway. And, I think we also were in a great position because Africa and Nigeria especially, I think, had a little bit of an advantage as a late mover. So we were able to see the success of these business models in markets everywhere around the world, and just felt it was a matter of time before it was unlocked in Nigeria. And these were really the right teams to be able to do it.
You've mentioned seeing something in the founders. What does that look like to you?
Yeah, so it's something that can't really be quantitated. It's much more qualitative characteristics. But I would say, especially investing in early stage teams, what we love to see are technology heavy teams, so developer heavy teams, because high quality developer talent is quite expensive.
Yeah.
We want to see the founders having knowledge and expertise in the subsector that they're operating in, so understanding the problems quite well. But we also want to see somebody who can manage a team and build an internal cultural, positive internal culture to really help their company scale up. So it isn't somebody who can just do all the work themselves, but it really needs to be somebody who can motivate and empower a team as the company scales up from 5 people to 50. And a little bit of it is arrogance. The types of founders that believe that they're the ones that can unlock the opportunity and nothing is going to stand in their way, and they have the resilience and the perseverance to really attack that.
I completely love that. So right now, when investing, what do you look for in a business? And if there are fintechs listening in right now seeking funding, what advice do you have for them?
Scott, could you design a video game?
I could make you a hypothetical one. If I took some random genres, mechanics, maybe blended them together, and created a new hypothetical game.
Now that would make a great podcast.
Undoubtedly.
So what would you make? Something original and exciting? A Dark Souls city builder? A co-op roguelike?
Everything. All of that. We could use the Nemesis system and put it in a first-person shooter. And we could have a loot system with survival mechanics and motion controls. And maybe you could, save a kingdom from some out-of-control toasters. What about party?
Catch the Gaming Blender on all your favourite podcast platforms.
Yeah, so when we're looking at investing, or I would say at least screening to the top of the funnel in our pipeline, and keep in mind we have a funnel of 300 plus companies that we have not only inbounds, but also have proactively reached out for. So there are a lot of opportunities there. A lot of times we're able to make a decision quite quickly. But the things we really look for are companies that have a business model that is not just a copycat. So if I saw another payments play today that is not already in the mature phase or
Yeah.
doesn't have something that's super unique, I probably wouldn't look at it, for example, even though that's a subsector that I've liked over time. We look for strong product market fit characteristics. So that's showing not only rapid and consistent monthly growth rates in terms of top line revenue, but also showing that they can actually monetize those customers and knowing very closely how much it costs to acquire their customer and the value that they can get out of that customer over the lifetime of that customer. So an LTV to CAC ratio is one of the most important things to us after the monthly revenue run rate and that growth rate. And those are probably the two things that we look for very closely. So for a lot of founders, I would say very much understand those numbers specifically. Secondarily, making sure that the founding team has a narrow focus on their customer base and very much knows what they're unlocking. I think in Africa, you have a both a problem and an opportunity where there's so many issues in the market. And a lot of times founders feel like they want to attack everything and solve all the problems that they see. But that really dilutes the internal resources, and also as an investor makes me feel that you don't really understand the customer set that you're really trying to unlock. So those are the most important things that we really hammer on.
Awesome. Okay, so let's say you're interested in a business. Now they're coming to pitch. What are the common mistakes you find when people are pitching their business or pitching why you should invest?
Yeah, so number one for me is trying to raise too much capital for the amount of metrics that company is realizing. So I think founders need to be very well educated that, first of all, their valuation needs to be realistic and reasonable, but they probably shouldn't even set the valuation. Let your investors set it for you. But you do need to have a very realistic expectation of your rounds, of how much you're raising. So that round needs to be clearly identified in what you're going to spend it on over the next 18 to 24 months, or until which time you'll raise your next round, and what metrics you'll realize until that point. And you have to be cognizant of not overly diluting you as a founding team. So that's my number one pet peeve, and it happens all the time. A company that's a $6 million annual run rate trying to raise a $20 million round, the numbers just don't stack up. Secondarily, putting in financial forecasts, although there's something that we might look for when we start doing our work, less important to me is having those in the deck. More important is really understanding these unit economics that I mentioned. How much is it to acquire your customer? How are your customers retained on the platform? How are they churning? How your customers are upselling, and what your smooth monthly growth rate really is. So those are really my pet peeves.
Okay. Think about a time a business came to you, pitched to you. Is there something that stood out? There's like one business you're currently thinking of. What did they do? They grabbed your attention. Maybe going into this meeting, you didn't think this was going to be the right move. Is there something this business did, or just a pitch that really, really stood out to you?
Yeah, I mean, I would actually maybe answer this a little bit different. So there's a lot of companies that we've engaged with at their earlier rounds, and maybe for whatever reason they weren't interesting to us at that point, but they have added us to their investor mailing list and kept us updated on the numbers. And we look at those numbers, we read those emails, and there's been times where suddenly, we've seen the switch turn on and we're like, wow, this company has reached product market fit. They now really understand what they're doing for their customer base. Now it's interesting for us. So that's also great advice. I think a lot of founders are very tight on their data. And to a point, they can be, but sharing this high level information with investors consistently can help you get on their radar. And, it's at the end of the day, there's lots of founders that can tell a great story, but it really boils down to what the numbers reflect and how you're unlocking that opportunity set.
One of my earliest podcast recordings was this business called Funda, and they were just speaking about what they did when they were turned down for investment. They said something similar to you. They had this list of people that they're emailed on every small win. So this wasn't necessarily all to do with revenue, but when they had a new member join, when they signed on a new client, and they said that they kept on doing this until it reached a point where this investor was like, okay, I've heard enough. I'm interested. And I was like, that's brilliant. Sometimes you just got to, even the smaller wins, just showing how you look at your business and where you find value, I think is so important.
Yeah, absolutely. Definitely.
Awesome. A question I have for you are, what are the challenges some of these companies you've invested in have faced?
Yeah, so the challenge that I think comes up a lot is the access of high quality talent when these companies are scaling. And what we find, especially in Nigeria, but I think that this is a Pan-African problem as well, is that because people are so entrepreneurial, the best senior talent goes out and starts their own business. And that really leaves a gap in finding the local developer talent or even senior managerial talent that can really help these businesses scale up. And even to a point now, I think Africa has become a hub for global talent agents to find people to work on contracts for some of the top tech companies in the world. And that's even made it more of a problem for us. Secondarily, I think another problem is certainly just around the access of debt capital. So for a lot of companies that are solving a lot of these real problems in terms of, neo-banking, access to credit, supply chain, the availability of debt plays a huge important role in them being able to scale up their business opportunity. And equity capital should not be used for that debt capital as much as can be possible. And the availability of debt in the African market is still quite limited. We're starting to see more of it in Nigeria, but especially in South Africa and East Africa, I think it's quite hard to unlock now.
I would love to go back to your comment on talent and talent in Africa. Is there any trends you're currently seeing? I know we talk quite a lot about the lack of tech talent in Africa, but is there any other trends you're seeing when it comes to talent, especially these early stage businesses? And do you have any solutions to the problem we're currently facing?
So I think talent it's almost a lagging, not indicator, but a lagging problem where a lot of successful tech companies are creating much more talent, but it lags the need, so to say, because the opportunity set is being, people are building businesses faster than these big tech companies can produce and build out their own talent to mature that'll then go out into the ecosystem. Of course, there are lots of developer academies that have helped, but I would say they've helped much more on the junior talent rather than the senior talent level. And that's where the big gap is. So eventually those junior talent people will have the training and the work experience and expertise to become senior, but that's also quite lagging. One thing in Nigeria, interestingly, that we are seeing a lot of is actually a lot more women enter tech as a preferred career line, rather than going into medical or law. They're being quite attracted to the tech industry because it's not only fast growing, but I think it's a lot less branded as a male-dominated field than a lot of these other traditional industries, and in some cases really offers a bit more flexibility. There's a lot of things that we still need to address around that, such as the workplace environment and certain policies around harassment and diversity. But I think in terms of early days of how the tech system is evolving, I see a lot of optimism there.
Yeah, and good talent in Africa is really expensive just because there isn't as much of it, and people can charge this amount because they understand their worth, they understand their options. We work with a couple startups that fall in love with certain talent. They're like, listen, I'm going to wait until my next funding round, then I'm going to hire this person. Or we have some people that believe in hiring, maybe taking off a couple years experience or taking away a couple skill sets and then training them up. Is there any advice you have for startups that are really struggling to hire the exact talent they want because of funding or because of just the salaries that these candidates are asking for?
Yeah, I mean, I think we very much are big proponents of not only developing and training talent internally, but making sure that they're also motivated to stay. So there's a lot of lack of education around equity ownership and ESOP plans and what that actually means for how it translates into cash returns. Right now, I think still a lot of tech talent on the continent sees their employee stock option plans as nothing but a number on a piece of paper. And we haven't seen enough exits where it's really translated into hard dollar returns. So I think that's a big piece of it. But I think that's what you have to do is you really do have to train internally, but also encourage your most senior talent to mentor the more junior talent players in there and build a culture where people feel secure and safe and they want to stay. I think Paystack has done an incredible job of this. Yeah. They've had some of the lowest talent churn we've seen anywhere on the continent.
What are they doing? What do you believe that they're doing that's keeping their talent there?
I think that they do an incredible job of building a culture that makes it feel like a family. And that means being transparent on decisions, not trying to hide information, keeping the structure quite flat, keeping managers' doors open for any sort of questions or concerns, really listening and taking feedback from even the most junior level of talent members, but also, having respect on people's work hours. I mean, tech companies are growing fast and there's a lot of demand for your time and resources. And some people thrive in that environment. Other people realize burnout. So it's really important to be able to build in the systems that reward performance, but not necessarily performance at the expense of employee health.
I love that. I absolutely love that. The last question I have for you is, what are you excited about next when it comes to Norrsken22?
Yeah, so we are very excited now about a couple of FinTech subsectors. So namely neobanking, microlending, and agency banking. We're also quite excited about cross-border transactions and are doing a lot of work there. But we also think that identity for the first time is really showing some very encouraging signs of being unlocked, and believe that identity both on the KYC and onboarding and open banking are really attractive opportunities right now. I personally am very excited over the long term about both supply chain solutions as well as social commerce models, because I do think that that's really the way that you're going to unlock commerce in Africa while empowering the mass market.
Absolutely love it. Thanks again, Lexi.
Absolutely. Thank you so much. This was a lot of fun.
Nice. Where's the best place for listeners to reach you?
Yeah, so I can be found pretty easily at LinkedIn, or our website is Norrsken22.com, and you can email any of the team members from there.
Fantastic. Thanks again.
Thank you.
Thank you for listening to this week's episode of Talking Success, Connecting the Global FinTech Community. Feel free to follow us on LinkedIn at Talent in the Cloud. And if you're interested in exec talent, expanding your team, or you yourself are looking for a new, exciting change in your career, check out our website, talentinthecloud.io.